Every time Bank of Canada cut rates, the headlines scream the same thing. The housing market is about to take off. We have seen it over and over. Experts has been promising a flood of buyers, real estate boards warning that the prices will surge, and media outlets running with the same story. And yet, here we are. After a full year of cuts, the housing surge never showed up. In fact, in many markets, the prices fell. So today, let's break this down. We will look at what media says, what really happened to the prices, and why those predictions didn't come true, and what all of this means if you are thinking about buying in 2025. It all started on June 5th, 2024. The Bank of Canada cut its policy rate by 25 basis points, bringing it down to 4.75%. Toronto's benchmark home price at that time was about $1.1 million. The headlines came fast. This will stimulate the housing market. More Canadians will qualify for mortgages. Pent-up demand is about to unleash. Poll after poll suggested Canadians were just waiting for the central bank to blink. And the minute interest rates went down, the buying frenzy would begin. That was the narrative. A surge was inevitable, or so we were told. But reality didn't match the hype. After June cut, the prices didn't rise. They in fact slipped. By the second cut in July, another 25 basis points, the Toronto's benchmark prices had dropped by $13,000. By September cut, another 25 basis points. Prices were down $40,000 compared to June. Buyers who had rushed in early, expecting a boom, were underwater within 3 months. And then came one big point, October 23rd, 2024, a 50 basis point cut. Media and industry voices promised confidence, frenzy and excitement, and yet by then the prices had fallen another $8,000. By November, we saw some of the weakest sales in over a decade. Prices were basically flat, up a couple of $100 in 2 months. A small comfort for those early buyers who by now had already lost $50,000 in equity. December 2024 brought another 50 basis points cut, this time paired with warnings about Trump tariffs and a looming trade war. Did the prices surge? No. By March 2025, another multiple cuts. Toronto's benchmark was still down about $40,000 from where it stood before the hype began. So why didn't the rate cuts deliver housing surge everyone promised? First, the mortgage rates didn't fall very much. Yes, the Bank of Canada lowered its policy rate, but the fixed mortgage rates are tied to bond yields. And throughout 2024 and into the 2025, those bond yields stayed around 3%. That meant a 5-year fixed mortgage from RBC and TD Bank was still roughly about 4.5% to 5%. Hardly cheap money. And second, the variable rates weren't attractive either. Even after rate cuts, most borrowers weren't saving enough to feel confident jumping in. And third, the bigger forces were at play. By late 2024, trade tensions with the US were rising. Tariffs were back on the table, and when your economy depends so heavily on exports, the threat of trade war hangs heavy over confidence. And finally, the elephant in the room, the supply and defaults. Despite the constant of limited housing, the supply was building throughout 2024 while defaults and forced sales were quietly rising. When more houses hit the market under stress, it's hard for prices to sprint higher even with lower policy rates. So why did the media keep pushing the same line that every cut meant a surge around the corner? Because hype sells. The industry wants buyers in the market. That's how the real estate board makes money. That's how the realtors make money. Bank wants mortgages in their books, so they make money. And media outlets want clicks and advertisement revenue. And the fastest way to generate all of that is by selling fear of missing out. If you don't buy now, you will miss the recovery and probably be never able to buy a property. The problem? That recovery never came. Experts went on TV in June, September, October, December, and March of this year. Every single cut saying the surge was almost around the corner. And every single time the prices either went sideways or down. As you might have noticed by now, they weren't in the business of being right. They were in the business of being loud. So what's the takeaway from a year of missed predictions? It's this: don't just buy because the media says it's time. The best time, as I always say, is when you're ready to do so, and also when the house fits your budget, when the payments are comfortable, when your job is secure enough to handle the surprises. If all of that things line up, maybe it makes sense for you to buy a house. But if it doesn't, don't just get pushed by headlines, because those headlines have been wrong again and again and again. So will the most recent Bank of Canada finally spark the surge everyone has been waiting for? Maybe. But I think there's another 25 basis points rate cut coming in the next month's sitting. But if the past year has taught us anything, it's this: a lower policy rate doesn't magically fix mortgages, trade wars, or rising defaults. The housing surge story makes for great headlines, but reality, it's a lot messier. What do you guys think? Will the cut finally move the needle? Or it's just another headline won't age well? Let me know down in the comments, and don't forget to subscribe for more deep dives into Canadian housing market.